Welcome to the CIO Update. There's much to look forward to in the coming weeks ahead. This week we have the Bank of Japan meeting, the Federal Reserve, and we're still looking forward to that OPEC meeting later in the month when we're going to get more indications of where oil prices are going. Let me just start with where the markets are and the sentiment we're seeing. We've seen fear in the market. That fear is coming from hopes that maybe the Fed will increase interest rates in September, but more likely at the end of this year. But those rate increases are coming in the background of still weak global growth that has people worried in equity markets and the fear of a rate increase fearful in the bond markets. We think the thing to be more fearful of is probably a lack of growth. We've seen that particularly in the US in recent weeks where economic data has come in below expectations. The good news is there are parts of the world that are starting to improve. And in China in the last week we saw good industrial production numbers, retail sales numbers and money supply growth, suggesting the economy is certainly looking more vibrant than we've seen for some time. That should be good news for Chinese equities, which have lagged global markets for much of the year. But we do believe the improvement in economic growth there will start to show through in better news as a backdrop to the equity market. More broadly, I think there's a big focus at the moment on the oil price. We saw the oil price fall precipitously at the back end of last week as the OPEC suggested that oil demand next year will be below their expectations. Meanwhile, supply has been quite strong, and both Libya and Nigeria like to bring oil back to the market in coming weeks. Will OPEC be able to respond? Well, they're certainly talking a lot, and there is an expectation that at their meeting at the back end of September, there will be some supply constraints brought in to bring some normality to the market. So in local GCC equity markets, we think we could be coming to the end of maybe some of the profound underperformance, particularly in Saudi Arabia, but you have to be very careful about your entry point. In currency markets, we've seen the dollar improve. It may be towards the top end of its trading range now, so look out for some consolidation. The currency that probably has been under most profound pressure of late has been sterling, where comments from the Bank of England chairman suggested that there were rate cuts maybe still in the offing before the end of the year, and that has brought sterling to the bottom end of its trading range. We expect that trading range to hold, so around 130 probably sterling offers good long-term value. So in summary, economic growth still troubling, still difficult to find. Central bank tightening, not very much of it. Bank of Japan, I think this week will be helpful. The Fed, I think, not increasing interest rates until the end of the year. So we still remain cautious. We're investors in bond markets and very selectively in equity markets. And maybe China, with a backdrop of good data recently, is due a run. Thank you.